All right, welcome back to another ICT Concepts video. Today we're going over SMT and how to use them to frame your trades. All right, so we're going to start here with a bullish SMT example. So here in this line drawing, we have a low, a high, a new low, and then we have displacement upward. So we're talking about two different correlated pairs right here. So what we see is the second pair unable to sweep the previous low. So we have a low that sweeps liquidity, which is what we call a stop hunt. And then in the second pair, you'd see that price wasn't able to sweep out the previous low and continues to displace higher. So this is an example of bullish SMT that you would use. So given this bullish SMT, we would expect price to not return back to this low and continue to displace higher. So now we have a bearish example. So we have a bearish SMT. We're going to start with a high, a low, a higher high that sweeps out the liquidity of the previous high, and we have displacement downward. So in the correlated pair, in the second example, we have a high, low, and then a new high that doesn't sweep out the liquidity of the previous high. So this is what we call a bearish SMT. So bullish SMT occurs at lows and bearish SMT occurs at highs. So one asset has taken liquidity and one asset has not. All right, so here we have a real market example. We have NQ on the left and we have ES on the right. So we can see that NQ was not able to take out that high where ES was able to take out that high. So that would make NQ the weaker pair in this scenario, which is bearish SMT that occurs at highs. So ES would be the stronger pair and NQ would be the weaker pair in this case. And in this case, you would short the weaker pair. So in this next example, you can pause the video and see if you can identify the SMT yourself to determine what the weaker and stronger pair is. So here in this example, we have a bullish SMT that occurs at the lows. We have NQ on the right and ES on the left. NQ was unable to take out the previous low and ES was able to take out the previous low. So in this case, if you're bullish on the higher time frames, you would long the stronger pair, which is NQ. And in this example, we have another bullish SMT. And this one can be a little bit harder to see, but we see that ES was able to take out this low and NQ was not able to take out that low. So here in this last example, we have a more specific example of SMT that you can use in order to frame your trades. So let's say this is NQ on the left. We have two liquidity points that we end up sweeping. And then on ES, which is on the right, we can see that those same two liquidity points, we only end up sweeping one of them. And then we get displacement off of it, which is what you can use to frame your trades on the lower time frame. So this is what we call a high probability SMT. Now, what would make this example less likely to play out or lower probability is if ES didn't take any of the liquidity pools and you just end up with low resistance liquidity like this. So you see that ES just doesn't end up taking any of the liquidity whatsoever. So that would mean this is lower probability. You can follow us on X or you can find us directly in our Discord.